Here's the truth. Whether you are in your 20s or 30s, the single biggest mistake you can make isn't skipping your morning coffee or not budgeting every dollar. It's taking on debt that cripples your future before you even get started. I wish someone told me this earlier. So today, I want to share what I wish I knew about cars, credit cards, and how those choices could either keep you stuck or make you a millionaire. When you are in your 20s or 30s, everything feels like it has to happen right now. You're making your own money, maybe getting promotions, and society tells you you deserve a nice car, a fancy credit card, and a lifestyle to match. Here's the trap. The moment you buy that new car or starting swiping the credit card for things you can't afford, you're digging yourself into a hole that could take years, sometimes decades to climb out of. Let's talk about cars first. Do you know what the average monthly payment for a new car in the US right now? $749, and even for a used car, it's $529 a month. That's not including insurance, gas, repairs, just car payment itself. Now here's the crazy part. That car, it's losing value the second you drive it off the lot. You're literally paying hundreds of dollars every single month for something that is going down in value. It feels good in the moment. Leather seats, new car smell, and nice rims, but financially, it's one of the worst traps. Let's imagine for a second. Instead of paying $749 a month on a car, what if you invested that money into a S&P 500, an index fund that historically returns around 10% annually? If you invested $749 every month for 30 years, do you know how much you'd have? Over $1.4 million. Now, let me ask you, how do you like your car now? Because with that kind of money, by the time you are in your 30s, or even you're already in your 30s, you could buy multiple cars in cash, nice ones, dream cars. And the difference is you'd own them outright instead of being owned by the monthly payments. Think about that. The money you lose on interest payments now could literally fund multiple cars, a down payment on a house, or even early retirement. No matter your age, 20s or 30s, it's never too late to redirect your money toward investments instead of debt. Now let's move on to credit cards. Credit cards are marketed like they are your friend. Get points, earn cash back, build your credit. But most people in their 20s and 30s, they are a financial time bomb. The average credit card interest rates in the US is over 20%. That means if you owe $5,000 and just make minimum payments, you'll be in debt for years, paying back way more than you ever borrowed. It's like playing a game where the house always wins and you're the one always losing. And here's the worst part. People swipe their card for things that don't even last. Clothes, nights out, random gadgets. By the time the bill comes, the thing you bought is already gone or forgotten, but the debt's still there, growing. Here's what I wish I knew in my 20s. Debt isn't just about numbers. It's about mindset. When you owe money, you're not free. Your paycheck doesn't belong to you. It belongs to the bank, the lender, or the credit card company. And the longer you carry that debt, the harder it is to build wealth. It's like trying to fill a bucket with water when there's a hole in the bottom. You'll always feel like you are behind. Now imagine instead, you drive a used affordable car that's reliable. You avoid credit card debt by only paying cash from your checking. You live below your means in your 20s and 30s, even when friends are flashing new cars and fancy stuff. The extra money, you are building a Roth IRA, invested in index funds, maybe even saving up for real estate. Instead of losing money on interest, your money is earning interest for you. That's the difference between being stuck paycheck to paycheck or having a financial freedom in your 30s, 40s, and beyond. Here's the harsh truth. Average saving rate in America is less than 5%. At the same time, the average household credit card debt is around $7,000. That means most people are saving pennies while paying hundreds in interest. The system is literally designed to keep you broke. If you flip the script in your 20s or 30s, if you save aggressively, avoid debt, and invest now, you're setting yourself up for a completely different life. I know in your 20s and 30s, it feels like driving a nice car or swiping that card is what life is about. But trust me, the real flex isn't the car in your driveway. It's the freedom to walk away from the job you hate, the freedom to take care of your family, the freedom to not stress every time the bills comes in. And all that starts with avoiding the traps that most people fall into their early and mid-adult years. So whether you are in your 20s or 30s, please hear me. Skip the car payment, skip the credit card debt, live below your means and invest the difference. Your future self will thank you in ways you can't even imagine. Because one day, while your friends are still stuck paying off debt from 10 years ago, you could be sitting on a financial freedom, and that's the life worth building.